some of the energy in the energy markets that we've been seeing. I want to shift attention on over into a look at the currencies. We've got our next guest. He's standing by. He's chomping at the bit. He's here to talk currencies and economic data this morning. We've got the chief market strategist at Agora Financial, Mr. Alan Nuckman, joining us. Alan, good to have you back. I want to talk U.S. dollar strength, but
good
first,
morning, Ben.
Good morning. First, peso weakness. I noticed this morning the peso is taking it on the chin this morning. Down into multi-month lows. It's back to levels they haven't seen since June. Is it weak data out of China and Japan last night, or strong U.S. dollar that's behind the peso selling off this morning?
I think it's more dollar strength. We can talk about that in a moment, but we also have the headlines that the new NAFTA vote is coming up here soon, so we'll see what that means. Obviously, we had a healthy recovery in the peso after that contrived crisis was solved. Now let's see if this can pass through Congress. It's kind of a shove down your throat moment here for this new NAFTA. Congress doesn't have any choices, and the president says he's just going to pull the old one off the table, and they either sign this one or there's nothing.
So, Alan, it's not just the Mexican peso this morning under pressure. We've got the New Zealand dollar and the 6A, the Aussie dollar, also weaker. I'm wondering,
right.
Is this related to China? Obviously, a strong dollar doesn't help this as well, but they had some really weak economic data, retail sales and industrial production. We're talking multi-year lows.
Right, but those numbers, we would be happy to have those numbers
here in the
America.
U.S.
So
good point.
I think one was 8%, one was 5%
right.
industrial production, and something else. So they still have very significant numbers. Yes, they're drifting lower. We're seeing the stock indexes right now down about 0.75%, so it's not anything significant. But you're just getting a lot of headline risk each and every day because the market is so sensitive about what's next. Everybody's paying attention to everything that's said. But there is some good news out of China, is that they were going to lower tariffs on automobiles now for a 3-month test period. So we'll see if that means anything. But, it depends on how you look at it. I look at that as a positive. That overrides the data, which I still wouldn't say is negative. It's just the growth from really strong is only moderately strong now.
Alan, is there something bigger that we should be concerned about here, or is this just trade woes and uncertainties that have been weighing on economic conditions? Because if it's something bigger to be concerned about, then we could be dealing with this for a while. But if it's just trade concerns, if we can resolve that, in theory, we can get back on track.
In theory, that's right. But this could drag out a lot longer than we thought. We did have a significant reversal this week. I know that I like to stress the technicals. A significant reversal in the S&P. We tested, we rejected on Monday, we closed higher on Monday in the S&P. That was a big deal. That took out those October swing lows. And since that time, we've been marching along. Now, with where the futures stand right now, the S&P is about unchanged for the week. But if you look at tech, tech's still up about 5%. If you look at the tech top 100, the NDX, about 5% in the last year. And we actually didn't make new lows here, and we've been seeing a series of higher lows in tech, and we've been seeing 4 straight days of positive action in tech as well. So I think that particular weakness and that concern may be alleviated here, and I think we could see a snap back in the market. You talked about the VIX in the last segment. The VIX has been hanging around this 21, 22 level.
Yeah.
Nothing significant, no real VIX explosions. We've seen lower highs in that VIX, and even when we made those new lows in the S&P on Monday, the VIX got up to 25. Nothing, no big deal so far.
Yeah, Alan, you mentioned again the strength in the dollar that we've been seeing in relation to the Mexican peso.
Right.
Talk to us about what you've seen in terms of strength in the dollar in relation to falling rates.
Well, I think what you're seeing in the dollar is just a slow grind higher. And I haven't been a big believer in this dollar bull essentially all year. And it's been a slow grind. Every time it looks like it's technically ready to turn over. We had a key reversal, a weekly key reversal in November, and that's been voided today. Now, let's remember that high that we had back in November, I think, or October. It was October. Was on a bank holiday, so maybe it really didn't happen.
Yeah.
And then we're seeing new highs in the dollar right now, and that's as we end the December contract. So we're shifting out of December into March, so it's kind of an iffy period as well. It's not with real conviction. It's a slow grind higher, just like it's a slow grind lower with the euro currency, and obviously with what's happening with Brexit and the pound is something independent. But it's not been a crashing move in other currencies. It's just been a slow dip to new levels.
Alan, talk to me about the latest in terms of Brexit. You just mentioned it. I've been watching closely into the no confidence vote, which obviously sided on behalf of May, but what have you been hearing in terms of the last 2 days since?
I've learned more about civics in America and in Europe in the last couple of months than I have in my whole life. So there is a lesson to be learned by this this uncertainty, is that we've learned so much about how things function, and it's reassuring to see the markets come through this, and to have a no confidence vote and to have the Brexit on this edge,
yeah,
and the markets holding relatively well, I think is very much a positive. So let's see how it all sorts out. But still, I mean, where are we at right now with the euro currency? 114, 126-ish in the pound. So, again, at some point, let's see how the markets react. I want to see how they react when they make new lows. We've got the dollar at new highs. But like I said, it's not a very significant move at this point. It's just a slow grind.
In addition to the no confidence vote and all the uncertainty associated with that, we had Mario Draghi speak this week. Now, for the most part, a lot of what he said was expected. They ended the bond purchase program. I'm wondering, though, Alan, because here in the U.S., once the Fed stepped away from, aggressively holding rates down through their stimulus package, we actually started to see rates start to rise. We saw things start to shift a little bit. I wonder if you expect the same here, if this is kind of the precursor to some changes that we've been waiting for a long time in terms of the ECB and Mario Draghi.
I would think so. I mean, they took it off the table for all of 2018. They did that a long time ago. So they said 2019 was the time they're going to be looking at raising rates again. And it's only natural. It's part of the economic expansion. Mm-hmm. It's going to happen. It's just a matter of when. And even with the rate expansion here in America and the rate rise, it wasn't a big deal. I mean, look at how far we've come. We bounced up to 3.25% in the 10-year note. Now we're at 2.8%. The Fed's action, where they raise rates 4 times, 4 1/4 point hikes, and we're sitting around 2.5. Yes, we're going to raise rates in December. It's a 75% probability. But then you look out into the future, and you don't get anything above 50%, yeah, essentially all of 2019. And then you can go all the way out to 2023, 2024. There's nothing in the system. So I think that rate issue has been taken off the table. And I don't think it's going to have any impact in the markets, and we're going to stop talking about it so much for just a little bit, hopefully.
Well, wait a minute, Alan, because at some point, if they keep coming off, we're going to start talking about the pressure that downward spiraling rates are having on the market, or at least uncertainty in terms of investors. But hey, Alan, before we let you get out of here, I want to talk about retail sales. We mentioned again the weaker than expected data out of China, how we would love to see 8% retail sales here, but 2 months ago, our retail sales were kind of weak, as far as I remember. Last week, they kind of bounced back a little bit. But, hey, retailers here in the U.S. have been under pressure in a big way. Yesterday, I looked at Michael Kors. I looked at Kohl's. We've seen multiple big names. Ralph Lauren, for example, coming off. Should we be concerned headed into today's retail sales number after seeing China's data, or do you think we'll continue the momentum that we saw last month?
You were talking old school. Those are things you buy in a store. I mean, do people still do that anymore?
Good point.
Things have changed. Retail is always going to evolve, and so you've got to understand more, I think, of the internet sales and what percentage that is of actual people going to the mall. The days of you and I going to the mall with our skateboards are over. That doesn't happen anymore. And then going to buy some shirts and school clothes in the stores. That's just not how it works anymore. The world's changed. So yeah, retail sales can sometimes have a little bit of a slowdown, but I don't look at that as anything indicative of the big picture. I think that people are just so overwhelmed with information right now, and so much uncertainty. The one thing we learned as little traders is that the markets need certainty, and that's certainly been missing. I will say with certainty, that has been missing in 2018.
All right, well, certainly a pleasure to have you with us here this morning. Alan Nuckman joining us live. Our pleasure, Alan. Joining us live from the Board of Trade. He's the Chief Market Strategist at Agora Financial, and we're